the primary way that we can de-risk our portfolios is via asset allocation, not just diversification. Again, diversification is taking a specific asset class, so stocks, right, and buying different stocks, different types of stocks, different sizes, different sectors, things like that, right? That's diversifying. But to employ asset allocation, that means we are buying differing assets and we are putting those in our portfolio. So we're buying things like bonds, we're buying commodities, we're buying precious metals, we're buying these different types of things that we can invest in. We're buying real estate to put in our portfolio, right? And the reason that we would do this and the reason that this decreases risk is because different asset classes are not perfectly correlated with one another, right? You have differing asset classes that are going to move differently, that are going to work differently. The bond market is not going to move just like the stock market. The stock market is not going to move just like the real estate market. The market for gold or the market for even something like Bitcoin is not going to move the same way as the stock market or the bond market or things of the like, meaning that their value is not derived from just the same place that the value for a stock is derived or for a bond is derived, right? And so given that that is the case, that is going to decrease the likelihood that everything that you own goes to zero. Why do people buy gold all of the time, right? Why has that been a big thing? And why are people nowadays flocking to something like Bitcoin? Well, the reason, broadly, right, other than people flocking to Bitcoin to try to make a quick buck, the reason was that they wanted something that was going to be apart from the system. It was going to be decentralized, right? It's going to not be a part of our traditional financial system. And in doing that, in moving away from the traditional financial system, that means that the value of whatever that is not reliant, whether it be gold or Bitcoin, on just what happens in the financial system. We've talked before how these things are heavily reliant on the ideas of supply and demand, and there's not much underlying asset value apart from supply and demand. But nonetheless, these are ways that you can be employing asset allocation to allow yourself to take risk off of your portfolio, right? Even if something like Bitcoin or gold or commodities or whatever may be more risky by themselves, to add them to a portfolio, at least in small part, that is heavily stock or bond weighted, will allow you to add a little mix in to where there's not as much correlation between the assets, meaning you're likely going to have less in the way of volatility within your portfolio. And that's the whole idea, to take risk off. Now, again, we aren't talking about just losing money, right? We're not talking about just down years. We are talking about, can your investments go to zero? And a diversified portfolio, right? If you have something like Ray Dalio's quote unquote all-weather portfolio, where you're buying long-term bonds, you're buying short-term bonds, you're buying stocks, you're buying commodities, you're buying gold, all these different things in a portfolio in differing percentages, right? Is that portfolio going to go to zero? Again, unless our society collapses, absolutely not. Now, does that mean that returns can't drag for some period of time? Of course, returns can drag for some period of time. We were just talking earlier about the Great Depression and how returns dragged for several years. And if you're an investor, that's got to hurt. It's got to push people out of the market that are irrational. It's going to push people out of the market that don't believe that the market can rebound. But what have we seen since the Great Depression? We have seen a century of economic success. We have seen a century of stock prices increasing, of the value of our economy, the value of companies within our economy increasing, the value of commodities increasing, the value of precious metals increasing, all these things increasing over time, right? Not decreasing, and not only not just decreasing, not going to zero, not becoming absolutely worthless on a broad scale.